Good morning, traders. Thank God it is Friday, and thank God we are diving into the hole today. Welcome, everybody. Before we start talking about news and what's to come, just a reminder that we are still having our coaching program. And I must say, we have seen some other people coaching prices. And for instance, if you look at ours, we are actually relatively cheap. If you look at the prices that we charge, for instance, for our coaching, people are absolutely charging a lot more than what we do in our coaching program. So um, just a reminder, we're still very active and people like what we do. So we've got a lot of positive responses there. So if you would struggle a little bit with your trading or with the psychology, with the technical approach as well. We've got a lot of technicians here. Harmonics, for instance, Andre Grega is our head master surfer of the Elliott waves. Of course, Blake is technical analyst expert. If you like more of a fundamental approach, Ryan and myself are really talking a lot about the fundamentals if you have issues with that. So each one of us has his specialities. So take a look at our page, and which I put um, on the chat here, and give us a try. And you can have like discounts for the first hour, etc., etc. We also have our trader funding program still running. A lot of people are taking it up now and enjoying also the access that they are giving, depending on the account that they take, I think, to our chat room. So people are joining us and having a good time in chat room, asking a lot of questions as well, which is great. We are all there, and even also our the other people in our chat room, all the traders, we are all there just to help each other and to make each other better, try to understand markets better, help each other with trading ideas, help each other with ways to trade. And when you take the assessment, you also will have automatically an introductory meeting with our CEO, Blake Morrow. So no hesitation there. Take a look at what our program does, and your only risk will be your assessment fee. Thanks, Brent, for that. Brent is saying that he would be in the community for the chat room alone, and I think a lot of people are. Brent, thank you very much for those words. Angela, hey, okay, Grega, listen to the flow show today, to the recording if you're not already, because Angela just showed there that she would not be able to concentrate on her trading because you're just too handsome. Oh, you know that Grega is our superstar, right, Angela? He's there for the looks, but not only for the looks, you know. He's a very great technician as well. All right, enough of that. I thought you were there for me, Angela, on the show here. Oh, there goes my Friday. Okay, enough of that. Let's see what happened overnight. Let's see what happened yesterday as well. First of all, we had the usual China update. Not a lot happening there. There are very few bond sales in China. The PBOC again continuing to inject. And what is interesting is that they fixed their dollar CNY rate back above 713, 713.58. That is still interesting because it means that the PBOC is pretty relaxed with everything now. Are they a bit confident that they can fix it there without the market starting to sell yuan again? Probably. I've read a few articles as well that the worst for China may be over, but I think the investors are still barring the dollar sales that we saw across the board, of course. They are still reluctant. We are turning around the dollar CNY fixings in the dollar CNH. So there's no premium anymore to be paid for the CNH right now. So we are neutral. If we start to move down well below those dollar CNY fixings and hold below there, that would mean that the investors are starting to have a little more confidence in the Chinese yuan. Also, what is of note, without even showing that really dollar CNH, is that it's become a mini dollar yen. If you look at it's a lot less volatile, but if you look at the moves in dollar yen, and dollar CNH, they are pretty much in correlation with each other right now. So there's a bit of global Asian thing going on there as well. So if you want to, or if you care about the Chinese yuan, have a look at that, because that's what I've noted over the past couple of weeks, is that we really are trading in a similar fashion, actually, in both currencies, CNH, CN, and the Japanese yen, CNH being the least volatile, obviously. Which brings us to Ueda-san. And Ueda was expected and has spoken in Parliament overnight. We expected a bit of a grilling from the opposition, as I said, in regards to the messy moves, the route, some people called it, and he had a few things to say about all that. First of all, he pushed the responsibility really of the said route onto the overdone concerns over the US economic data, which have since somewhat abated. So he says, it's not my fault. It is the fault of what the market is doing and reacting to US data. He's actually somewhere right, because it had been well telegraphed that Japan would start to hike rates. And as I've been saying so many times, for the yen sustainability to rally, the rest of the world should weaken around it, and that's exactly what happened. We recall that right after the last Bank of Japan rate hike, we had that first alert on all those jobs data out of the US as well, and then we had like the inflation and stuff coming down. So it's not all down to the Bank of Japan, of course, those moves. But he did add that actually, in the same vein, he did say they will continue to adjust the monetary policy when warranted, and if inflation aligns with the outlook. And if inflation aligns with the outlook, he sees more actually hikes in the pipeline. So, and he also added that short-term interest rates are still very low, and they will move back to neutral if the economy is continuing to do okay. So, I mean, that for the pushback against what the people criticizing what happened there with the yen may have had to say. But he did add then a couple of lines saying that basically they will monitor the impacts of moves on the economy. So, I mean, if the yen moves too far to the other side, they probably will have to pause a little bit, probably. But in the meantime, I mean, he's not really saying that they will pause because of that pretty violent move in the yen. So that is what the yeast is of what he really said. The market reacted to it. Sent the dollar yen a bit lower, sent the yen globally a bit stronger, but right now, and that is, and I'll show it on the rates as well. We are at interesting levels there, and some of those levels in dollar yen, and I think it's also due to other yen pairs than just the dollar yen. They are starting to hold. So the market seems to buy the fact that if we get those big moves, they may be pausing a little bit. And also, we heard from another BOJer in the slipstream, Mr. Kato saying that they need to take time to decide what to do with the ETFs. There are no immediate plans of getting rid of the ETFs either. So that has been somewhat supportive for the Nikkei overnight, because obviously, if the Bank of Japan would start to sell ETFs, then we could imagine that it would have a pretty big impact on Japanese equity markets. So they don't want to spoil the party yet for the Japanese equity markets, that is for sure. And therefore, they are pausing with even the thought about selling the ETFs really. And then lastly, in Japan, we had, and that's the little concern that the government and the MOF still has in regards to the yen. They don't seem to want the yen to go too violently stronger from here. Suzuki found it necessary to say that they are still deciding whether the inflation is fully defeated. He says he can't deny the risk of going back to deflation, and we haven't fully defeated it yet. So that is, he was probably talking in Parliament as well, in between Ueda lines, trying to send a bit of a message to Ueda, saying like, go slowly, my friend. We don't want you to ruin the party. That for Japan. And what else did we have? Yeah, we had a few speakers yesterday, and we had because we have Jackson Hole starting and some of the central bankers arriving there. We also had a few interviews on the main news wires as well, with some central bank heads. And from the Fed side, we first heard from Susan Collins, and she said, sorry, that the timing seems appropriate to start easing, but not seen yet too many red flags. Harker said he won't commit on any Fed action, but he's ready to start a methodical course of cuts. But both also said that they see a gradual move. They don't see an abrupt move. So, I mean, both saying that, and we have seen those Fed minutes as well. They all hint at September. September is a done thing, as we have already been talking about, but the size of it will still be depending on data. And as I've been saying, the main data now is going to be the next NFP and actually household survey as well, because we have seen those revisions. So people will be looking at the household surveys too. So moving, yes, but gradual. And we heard similar comments from ECBers. Kazaks was saying that he's very much, and he used to be a pretty big hawk, right? He says he's very much open to discussion on a September rate cut. They will still be restrictive after a couple of more cuts, and the gradual approach, here we go again, is the best one. He did add though, and that's why I always say that well, if you're in the euro, well, and to me personally, the euro is not always the best expression to show weakness somewhere else. We've seen it again in for instance in euro sterling. We've seen those euro commodity currencies coming back down a little, even though the dollar side of the euro dollar is still weak right now. But he said he's worried about the EU economic weakness right now. So we have to take that into account as well. Okay, so a hawk turning neutral to perhaps even slipping towards a bit of the dovish side. And then we heard this morning from Vujicic, and he also said the uncertainty surrounding inflation is gradually waning, and he is also open to gradual cuts. And here we go again. I mean, gradual is the new. What was the term that we used to go? It was not temporary, but about inflation. I think the new term now is we are going to be gradual, and That brings us to Jackson Hole. But before going into diving into the hole, I've got like two other things to mention here this morning. The geopolitical side, and we know that between Russia and Ukraine, it's not really looking good. Seems like the Ukrainians have done another drone attack this morning. We can expect, of course, any time Russian retaliation somewhere, and still have to keep an eye on that. But in the Gaza region, it seems that the U.S. envoys are wanting, nothing being done yet, but are wanting to be slightly more optimistic, and because they told the Security Council that a Gaza ceasefire and hostage deal is in sight. So we may, and there's your weekend risk coming. We may hear something about the geopolitical side in the Middle East. Okay, so be prepared to come in on Sunday evening, Monday morning, and get some, whether it be positive or negative lines on the Middle East situation. Okay, and then finally we had the conclusion of the DNC, the Democratic National Party. I was going to say concert. No, I mean, yeah, the party. And Harris has officially accepted her nomination. And of course, everything was upbeat and stuff. But I mean, the main line is that she is now officially the Democrats' candidate going into the US elections. That for that. Then we quickly have a look at what happened yesterday on the data front. Actually, not an awful lot, although we have seen some more weaker data coming out of the of Mexico, and we are on the approach of quite important levels there on the dollar mex. We know that the Mexican peso has been absolutely hammered over the past weeks. We are approaching interesting levels there, so just worth noting. I'll probably have a look at the mex today. We had the claims, no big deal. Everything is going relatively okay-ish. Chicago Fed national activity coming in negative, but that stuff is a bit like really random, and the market didn't really react to it as well. And then we had the PMIs out of the US, and what do we see? Exactly the same divergence as we get in Europe and pretty much around the globe, is that manufacturing is still slow and still not feeling good, but services are outperforming now. This looks, on the whole, if you look at the size of the economies and what services mean versus manufacturing, for instance, or farming also, for instance, is still a big chunk here. But if you start to scratch the surface a little bit, it's not a great report because manufacturing slowing down, it's still a big piece of the economy. So the market took it as a pretty decent report because we saw the dollar regain some of its losses on the back of this PMI, and likely on the back as well of a no red flag on the claims, for instance, but and ahead of Jackson Hole perhaps already as well. But it's not been it's not really been holding all the gains, and I think we now let's say ball back in the middle, and let's get into the hole with a market that is still quite negative on the dollar. Just let me see quickly on those because I missed those actually. Okay, the 30-year here was a bit lukewarm, but as I said, it was a small amount. I don't think a lot has to be taken from it either. We had a bit of a tail there, about 1 BP tail. So it's not a great auction that we had, but the market really shrugged it off. Moving on, we had a few negative retail sales in Kiwi land. Not that the Kiwi overly reacted to it, But we need to start to pay a bit attention because we know that RBNZ cut the rates. We need to pay a little attention to what those Kiwi data are going to tell us, because starting to cut may mean that they continue to cut. Okay, so and if you start to get a bit more negative data out of New Zealand, pay attention to it. Also, I just would like to add here that the Kiwi market is not a huge market. I used to work in banks. I used to be an FX spot market maker for a very, very long time. I have traded those currencies. If a market like that starts to turn on negative data, pay a bit attention. Okay, it's not as easy, or it's not as clear on some of the levels. It can really quickly go one way or the other when data start to move in a currency that is not as liquid as, for instance, just to name euro, dollar, or cable, for instance. Okay, so pay a little bit attention of it. Consumer confidence in the UK, as prior, not moved a lot. This came out, the Japanese CPI came out ahead of Ueda's intervention in Parliament, and that does not tell us that inflation is really slowing down. All right, so that is another one that is going to tell Ueda that they can actually continue if they want to hike slowly. All right. And the next one that we will have to look at now, as he said they themselves yesterday in a report, is that we are going to have to watch the Tankan very closely going forward as well. Right, that is about it. Unless you traded this Swedish unemployment, it's pretty bizarre because the month before we had a bit of a big jump, and now it's coming back, and I don't know why. I think there must be some summer adjustments in there. Why this unemployment rate is jumping by 1.5% out of the blue? Okay. French business survey a little bit better than expected, and closing in on the 100 mark. Now, it's August. Remember what we said yesterday? There still can be a bit of a Olympics positivity in there, okay? We will need to watch what the September number will show us. What else do we have? We have obviously Jackson Hole coming up, but we do have a building permits out of the US in between, and then since we are on relatively important levels here in the dollar CAD especially, we do have the retail sales coming out in Canada. We know that Canadian data are pretty backward looking, because this is the June retail sales numbers. Yet the market can move on the back of it. Okay, so just know that this could be a bit of a mover for the Canadian dollar, especially that as many reports have shown that the market is still pretty short Canadian dollar. So this may be, if they beat, for instance, we could see a bit of a move down to that 135.60 level, which is pretty important as well. And then obviously Mr. Powell, and I don't know if I have to repeat everything that has been said already about it, but really the main question will be, let's say that there's a couple of questions. One, is he going to give the market 50 BPs on a plate in September? I don't think so. Two, how many cuts are coming, whether it be for 2024 or 2025 as a whole? And I think he's going to tell us again that he's data dependent. Actually, I personally think that this may be a bit of a disappointment, actually, going into the weekend. The market is expecting a lot. Okay, yeah, Paul, I'll look at Aussie Kiwi, mate. It may be a bit of a disappointment for the market, and who says disappointment could mean that the market needs to adjust their dollar positions a little bit, being very short in the immediate, but according to what we saw, we still can't forget those data, okay, that we saw, and those revisions. And even though the PMIs were okay, we've seen other data which were a lot less okay, especially on the jobs front. All right. So let's see what he says about the jobs. There could be your potentially more dovish speech as well. If he really says like, well, this is a big revision, but I remind you as well that he said already over past interventions that he did that they know that the some of the reports are showing different numbers than the BLS. So he may say that this revision was expected and that they knew about it as well. So it's going to be an algo fest this afternoon for sure. If you're a trader, if you want to, if you have an algo or if you find yourself being in an algo, know that algos go in and out positions every 5 seconds. Okay, so I personally am not carrying a lot of positions, and I will pick up pieces if pieces fall out of it. Okay. That for what the Powell intervention will be. And then we also have, for those having sterling in position, about an hour later, we have Bailey, and I think also his vice governor is there as well. So we, if you're trading sterling, sterling is now the European exceptionalism, okay? If you look at euro sterling and if you look at the cable. So let's see what Bailey has to say, because the market is screwed back a little bit actually on rate cut expectations for the Bank of England. So it might be a bit of an interesting kicker that we have after Powell. All right. Now then. Okay, then we have Goolsby as well, but really, I think I'm going to pass on Goolsby because he doesn't know whether it's Friday or February. This guy, so he's just changing tack so much. I mean, I'm just not going to bother too much about what he's saying. And that's it. Let's look at what's happening, and I'm going to show you one first, which I think is relatively important. And look at what's happened even on this is the weekly, all right? And look where we are, and look what's happened over the past weeks as well, okay? Because sometimes we need to look at the big picture. We need to look at it has been violent. It's been right up and down and in the middle a lot of times. But look what happened here, okay? Since we started in 2021, all right, when the Fed started to signal around here, I said in May, June, I said be careful and be careful about the thing because the interest rate sphere is starting to change, all right? And when dollar yen took off, since then we haven't traded below, we haven't closed, not even traded below the weekly daily cloud in the dollar yen. And when you talk about clouds, you have to think about Japanese investors. You have to think about Mrs. Watanabe, sons and nephews right now. This is, to me, is pretty interesting. And going forward, this could be still having a lot of importance. It's a relatively thick cloud, but we can expect that on the weekly also because of the amplitude of the moves that we've seen over time here. But note that this weekly cloud top is bang on 146, the figure today. So we are turning around. Watch where we close tonight because it could have its importance. All right. If you drill down to a more well shorter time, but it's still a weekly. Take a look at where the 100 moving average on the weekly is. And remember the levels that we spoke about, 144.50, 60, all right? It is at 144.60. If ever we see a drop on Powell today, that is going to be your next level on the downside to watch once more. We have spoken about that level, okay? I mean, this is, we've got now two very well-defined levels here. And it's also the 23.6 of the, no, that's 146 and a bit. I know it's another big level somewhere here. It's also the the 50% of the 2023 up to the highs level, the 50% also comes in at 144.60, okay? So, and it's been traded. It's told us that 144.5, 144.60 has its importance. So that is your other level, okay, on the downside. If that would break and hold below, it's probably going to mean bad news, all right? Now, on the shorter term, top side, we are looking here at 146.5. It showed up, and it's also a bit of a horizontal level, a bit of a fib level as well of the bounce, coming in around this 146.5. That's your level on the top side. If Powell doesn't give us anything dovish, let's say, and we start to break above this level, here's your next level of interest, 147.60, okay? I don't have a position in yen right now, but when I look at some yen crosses, I'm starting to find them hold well at certain points. Of course, I'm looking at stuff like Aussie yen, Kiwi yen, but I'm especially looking at things like this sterling yen, which is gradually getting back, and we are trading around that 200 DMA, which is at 192 the figure. We're trading right now at 191.75. I've been speaking about that yesterday as well. And we are finding bits on dips. This is a daily, okay? But look, despite all the violence that we had in yen pairs, in all yen pairs, and even in sterling on its own, recall that we had that big spike in euro sterling as well. We are back there, and it's been traded, okay? It's been traded mid-August. It's been traded start of the week. So 192, keep a very close eye on where we are at the close of the day, all right, in sterling yen. Because if it really trades through, I wouldn't really rule out if we gradually start to move back up to levels of 194 or 197 at some stage, just because of the strength of the sterling. And the strength of the sterling is obviously reflected as well in the cable. We are back to July 2023. 31, 42, 45, doesn't really matter, the one a peep, right? This is one that is going to be scrutinized when on Powell and Bailey, okay, this afternoon. If we get any dovishness on the dollar side and Bailey says like, well, yeah, the market is right in pricing only one more cut this year, this could easily fly through, okay? If you want to steer away from the dollar, and I said also 173.25 yesterday. I said, okay, if it gets back down there, perhaps pay a little bit attention, and it actually printed 130.76, and then we started to bounce. But to me, really, the prior high here is going to be one that you have to look at, 130.40 after on the combination of Powell and Bailey, if we would get a setback in the dollars, all right. But one that is really heavy after this spike here. We're now even trying to get, well, you could argue that we could put the trend line there, and we are right on it. But look at where we are. This is the spike that we had in July and August, and we are trying to break below the 61.8, which is the which is at 84.75. Okay, so if you steer away from sterling, from the cable, sorry, this is one to look at. And I'm half joking, of course, when I'm saying like the UK exceptionalism, but look at the divergence between the data out of the UK and out of the EU. This is still, to me, this has the potential actually to get back down to those low 84s, unless Bailey tells us later that the market is wrong in pricing only one cut, and that they are happy with everything that they see for more cuts. Okay, but in the meantime, I'm not ready to catch a knife here. I'm actually in in small steps short. We've also broken this prior low here around 84.80. So it's still looking quite heavy to me. Any bounces to 85, the figure should of course be scrutinized. Because that's where the market is always looking at 85, the figure 85.10, 85.05. They're all levels, okay? So 85 figure 10. If we get a bounce, keep a close eye on what's happening there, okay? But if nothing changes today, I can expect that there is potential somewhere to go and have a visit down there in the low 84s. What else? Oh, yes. I've got a question about the Aussie Kiwi. But to be honest, I haven't watched Aussie Kiwi a lot over the past weeks. It's not one that was like particularly on my radar. But let me just go back to what was the question? Comment on Aussie Kiwi. It looks like a bottom has formed. What is telling you that the bottom has formed? If you could comment, Paul, what is telling you that the bottom has formed, really? Maybe there are different indications here. Let me just see what this is. Whoops, why is it that far? Oh, on the hourly. Okay, let me see if I can find anything on the hourly. I'm usually not looking very too deeply into hourlies myself, but looking like a bottom has fallen. I perhaps I'm not looking at right indicators or so, but I mean, yeah, I know that people are trying to buy it. Where is it trading right now? 109.28. We are below the 50%. Okay, it's not a FIP. Yeah, the 50% is not a FIP, but we are below this 109.40. And I've seen this one mentioned by a few people, but we are below there. So I don't know. I mean, okay, 109, 15, 20 could hold also, but it's going to have to go back above 109.40 to start turning, in my opinion. Okay, if you get above 109.40, okay. If you get a bit of divergence between Kiwi and the Aussie, okay. But I wouldn't exclude a move back down to high 108s even. And there, we may need to reassess, okay, for the Aussie Kiwi. There we may need to reassess what's happening on the Aussie Kiwi. But for now, we have seen so many little rebounds and little stuff, and then go even deeper. Now, on the back of the data, as we've just talked about on the retail sales, if you think that the bottom has formed, you could start to potentially buy a few and put your stops below 108, 85.90. That's a possibility, but I mean, I'm going to need confirmation to know that the bottom has formed. There's a few that I wanted to look at. The euro dollar brand, we are at high levels. 111.40 is a level. It's all going to depend on Powell, right? Today, we've had a little bit of a setback here. 111 the figure already held, so that's your first level. Get a close above or below 11 the figure. It's probably already going to be enough to close the week, right? And if you start to retake stuff like 111.5 this afternoon, this is probably looking at 112 for a decent test of the 112, right? But it's all going to be the dollar this afternoon. So yeah, 111 is your first level there. If it would go below 111, and I know people are looking at all kinds of levels here, 110.80, 110.70, 110.5 is probably going to be a level as well. But if we really start to, let's say, go higher in those yields here, could this be looking like a little bit of a head and shoulder? And if 111 breaks, we could see a move down to, for instance, 3/4 of a big figure. This is, and that would bring you back down to 110 1/4. That may be a possibility, But let's see what Powell has to say first. Okay, there's a couple that I wanted to show. First of all, dollar rand, and I've gone really, really small. Yesterday, I bought some just around this 17.94. Let a few go already because I really want to keep my risk very small. And we are back trading below here. Powell will probably decide upon that, but I'm not going to be stubborn with this position, okay? If we start to break back below here, since I already let some go, my average is pretty cool around mid 1780s, goes back below here, I'm not going to be a hero, and that would mean likely that Powell is saying something either very dovish or something that is going to support the equity markets and risk, and that is perhaps going to put downward pressure again on the rand. And Derej is here, so Derej is also always wanting me to talk about gold. Okay. We've had a stop run under this 24.80.85. Well done, Angela. I hope you screwed some back of your position down there. And now we are back trading around 2,500. I think the close of the week is still going to be important. Whether we hold above this 24.75. Yeah, well done, Angela. Whether we are above this 24.75, 85-ish zone, that's going to be important. If we get a little bit of dovish tilt from Powell, I think it's going to be enough to retake this 25 and gradually move up again. I don't have a position right now. I'm just patiently waiting to see what Powell is going to give me. If in turn we're getting back below 3/4 and below yesterday's low, there's probably more coming, and then we could actually see perhaps a move gradually back down to low 2400s. But that was exactly last Thursday's high. Yeah, here, this one. Yeah, 2470. If you get a confirmation below, that is probably going to signal that we have a deeper retracement. I would still call this a retracement because if you look at the overall picture, I know this is now starting to look like a very active chart. But if you look at the longer term, this is still in bullish territory to me. Globally, and we have setbacks in bullish territories. But I mean, taking into account that September is probably going to be a cutting month for a lot of central banks, up on the tip of my toes, I think if we get down to those levels, I'm going to at least get interested again. These for gold, silver is 30. 30, 30, 20, 30 and a quarter. That's where we 30 figure 20. That's what we have to look at. We may see a bit, depending on Powell, a move back down into 28.75, and there we will have to see what the market wants to do with it, in my opinion. So 28.75, 30 on silver. I don't have much more to say right now. If we do get bigger setbacks, I'm going to get very, very interested if we get down to those prior lows again, but that's probably music for later. I don't think that we get more than a buck's move out of Powell today. And I think I'm sort of, oh no, I wanted to show you the CAD, right? Struggling. We went back up above 136. I bought a little and sold a bit out of it again. So I'm watching with about half of what I had. I'm not feeling overly confident, and this is my zone of for me, at least, this is the zone where I'm not going to hold it. If we get below 135.60, I'm out of there. I'd love to see a close above this 136 figure 10 to get a little more constructive. And if we start to move back above 136.5, then we can go higher again in dollar CAD. But we've seen also many reports that the market is still pretty short Canadian dollar. So any dovishness, despite sluggish data out of Canada, any dovishness could see a move back down here, and clean a few books out. So that is the risk for today. Aussie and Kiwi. Yeah, on the Aussie, I'm still saying if we really get a dovish Powell, it's possible that we are going to perhaps get closer to those prior highs again and the big zone 68 figure a quarter. But do we really get a percent move out of Powell this afternoon? I'm not even sure. Okay. Setbacks 66.80 for a starter, 66.60 on the way on the downside. Those are the levels that I'm going to watch. And the Kiwi is still trying to decide what to do with 61.5. And that's going to be your, it's relatively going to be straightforward to me, is do we close the week above or below 61.5? And that's going to direct what we are doing next week here, okay? And that, ladies and gentlemen, brings me to the end of my show today. Rest me to thank everybody for being with us day in, day out, every day of the week. And thank you for all your nice comments. I'll make sure to tell Gregor he's our sexy superstar, Angela. And we speak to each other on Tuesday, ladies and gentlemen. We have a bank holiday in the UK on Monday. There will be no flow show on Monday, okay? So for the flow show, we see each other again on Tuesday. Thanks very much. Have a very nice weekend. Stay safe in your trading this afternoon, okay? Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.